Welcome to This Week in Money. I'm Jim Goddard. Today, Institutional Advisors investment strategist Bob Hoye on the market hangover in Shanghai. Edible Park Investment Council President Danielle says it's time for Canada to bail out of old school investments. And Kingdom Economics President Swenson advises precious coins could be a wise investment. We'll talk to Bob Hoye right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome to This Week in Money, Bob.
Good to be with you, Jim.
The markets started off the week rather poorly after some bad news in China hitting the Shanghai market.
Yeah, that was overnight. It was down about 5%. These markets had been recovering out of the terrible crash into August and then the test of that, which was done in September, and generally recovering. And things in China are, well, levitated and very precarious. The many members of the governing classes were long the stock market. So then when they got hit in August, there was magnificent efforts made to prevent it from falling further, but it eventually fell 35%. So big rebound. And now this one, I was just talking to one of my friends who's a very good trader, and we're just wondering how they're keeping all of this stuff up in the face of, as I pointed out, rising interest rates for low-grade bonds, junk, and all that sort of stuff. But anyways, China got hit, and then European market was a little weaker, and not much change in New York here today. S&P up $1, Dow down a couple of points. You had, I guess, one of the features, the U.S. dollar remained firm at that on the DX at about 100. It's quite high. Who knows? I think it should trade sideways for a while to get used to this level. And, of course, with the firmer dollar, gold was down about $10, silver down around 7 cents, not much trade there. And you had here, you've got T-bonds, junk bonds were up on the day. They were having a happy time. And over on the commodities side, you had grains, corn, wheat, rice, and soybeans were kind of on the downside. Lumber was down as well. And also, on Friday's close, you had the Canadian dollar was down a few ticks, looking a bit soggy. And what was interesting, though, is crude oil. It had done a nice recovery out of in late August on that crash. It got down to into the 37 level, and then it bounced up to 50, and then it had been holding in the mid-40s, and let's say it closed at 40 and change. And you also had copper, which had got down to around actually 2 cents earlier in the week, rebound a little, and then it was a bit of a down day yesterday, and so copper's around 205. Now, these commodities have been consistently weak. We are in a month of November where you can see a seasonal low for copper, which we're getting. And then also on the crude oil, which is interesting because it has a tendency to pull stock markets down. It can have a seasonal low in December. So at 40 and change now, it can, if it takes out that 40, going below 40, it would easy down to the 37 reached back in August. And also with a downer in crude oil, that has a tendency to take the inflation bulls away from gold and silver. So here it is. As the week ended, the dollar was firm to steady. Treasury bonds were up. junk was back a bit, and you had weakness in the grains and a bit of stability coming into some of the base metal prices.
And of course, we always have seasonal things that happen. If it's a cold winter, natural gas goes up, but there hasn't been a prediction of a very cold winter.
We don't know whether we're going to get those polar vortexes coming out and hitting the central part of the continent to the east. But certainly in the western side these days it's a little cooler than normal. And who knows, I read in various places across the northern hemisphere, right across to eastern parts of Russia, unusually heavy snow in central parts, and parts of Europe getting unusually early and heavy snow. So here we are on the west coast having some bright sunshine and a cooler day.
But of course, we were given snow in places it belongs. The ski resorts are very happy this year.
They got a good dusting for a start, and much better than this time last year. To say what the weather's going to do, but it would be very amusing to have bitterly cold going into the great climate convention in Paris at the end of November and into the first couple of days of December. It would be fun to have them visited with a cold blizzard. How would that be?
And how about satellites showing that the ice is building up in Antarctica? It's not melting.
Oh, yeah. It's spreading. Even NASA, perhaps somebody there is getting interested in their own reputation and have come out and noticed that the net over the last decade, there's been a net expansion of ice, net of what is being lost out and around the fringes, as the ice moves out to get to warmer water. Of course, on the western side of Antarctica, there's a pretty high melt there, but that's due to the ice is on top of active volcanoes, which have a tendency to warm anything up.
Yeah, and I'd like to see somebody put a tax on volcanoes. Bob, thank you very much for chatting with us.
Good to provide you with the wrap.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Coming up next, Danielle Park on This Week in Money.
Always consult your investment professional before making any investment decision.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome to This Week in Money, Danielle.
Hello, Jim.
Canada is suffering financially because of the downturn in the oil patch, but you feel perhaps instead of being so downturn and glum and just standing around waiting for an upturn in oil, how about putting your energy into something else?
Well, it's interesting. It's not just me that's been saying that for some time, but it seems to be a revelation, really, that's got critical mass now, probably for the first time ever, Jim, I think, in the history of humans, has renewable energies really taken center stage. And I think it's a bunch of things all at once. I think it's the obvious climate change that's going on and the concern about how rapidly that's beginning to harm all sorts of things, from water supplies and massive droughts that are happening in places like, Syria, part of the refugee crisis being driven by a beginning in a drought, to California, where massive drought is impacting, their most, some of their most profitable sectors like agriculture, and just air quality and, everything that's combined in the biosphere is really starting to freak people out. And I think that coming at a time when we have this big plunge in oil pricing, so you have sort of a power shift. At the same time, you've got conflicts. I mean, this is so connected, isn't it? Like the ISIS and the revelation that they get hundreds of millions of dollars by selling oil supplies, basically stolen oil, to various places, Turkey apparently being one of the places that's been buying oil off ISIS. How did they get the funds to inflict terror on the rest of the world? Mostly through the flow of oil that came into their country that either was driven by demand from the West or, as I say, from people buying it off them on the black market. And so, you've got that impact to the climate at the same time that you've got the revelation that oil is creating great hardship and conflict, military waste, and all that in the world. And also because of the credit bubble, and this is one of the gifts the credit bubble gave us, the boom in flood of capital that came into the commodity space in the run, particularly from, say, 05 to 11, in that last 5 or 6 years, was this massive amount of money that flow in, and fracking, and also just grid advancements that were made. The Tesla car, inspiring a whole growth in the automotive industry. They were very slow to that transition, but in the last couple of years, all the major car manufacturers are reporting an interest in or plans to roll out electric vehicles. So you've really got the whole world aflutter at once, and some of it's driven by excitement about the future and potential, and I think that is the business opportunity here is enormous. And others are just driven by a concern for how we're going to keep sustaining life on Earth.
Why isn't Canada taking more advantage of its, well, right now we have a low dollar. We make aluminum. That's great for an electric car. Why don't we make those?
Well, that would require manufacturing. And so far, you've still got these antiquated North American car manufacturing companies, which are just so far behind the ball. I mean, they've got, some sort of pathetic little efforts in terms of electric or hybrid cars, which they really did as an afterthought, as a kind of a niche market teaser rather than as any serious effort. They doubled down, of course, on the F100 truck series because that's where the profits were biggest. The SUVs were the biggest profit centers in North American cars. And so all the attention and planning, everything's been driven to how do we get as many of those out through whatever sketchy credit we can throw on to people just to keep those sales going. And they really didn't give any credence to the reality that the world's going to electric vehicles. And it really, I'm not surprised that they haven't taken any initiative in realizing, because there's so much policy is controlled by that status quo, both being the fossil fuel industry as well as the established status quo in the car manufacturing, it's not surprising you haven't seen enough advancement in policy. But you're absolutely right. This is an opportunity, not just, as we've said, from a business perspective and a concern about the biosphere, but also from a political transition. The fact that power shifting, literally political power is shifting, because as these renewable energy technologies gain more traction and scale, and they're on hyper growth phase right now. The Solar City just came out with a new panel that is leaps and bounds ahead. Like, it puts the actual wiring behind the receptors themselves, and it creates massive efficiency gains in solar panels. As an example, I mean, sorry to jump around, but there are so many initiatives right now coming out every single day that I think that this is part of this awakening. I heard David Suzuki saying, I think he's turning 80 this year, or he's just turned 80, and he said in his 80 years he's never seen this much worldwide consciousness or awakening on the issue of energy and doing it smarter going forward. For the first time in Paris this year, 20 years of that conference starting in December, it's the first time that they haven't just got together and focused on, carbon emission reductions and how to try and do this sort of top down. It's the first time that they've now put renewable energy at the center of the stage and rolling out, showing the world how many fantastic initiatives are already here to help solve these energy issues without having to just focus on fossil fuels. So it's multilateral, it's everywhere at all at the same time, and I think that, as I say, these issues like, massive climate events that are concerning people on the ground. There's stories of, Chilean farmers and people in revolt because commodities producers have stripped all their fresh water supplies and they're left in drought. So this stuff is all connected, right? And so I think that we have a momentum at foot in the world today. So back to your question, we have another reason for change in that respect, not just all these political power shifting, but we literally have governments changing around the world, because status quo governments have been largely out of favor in this painful transition away from, fossil fuel-based economies. And so we have an opportunity in Canada, for example, with the incoming Liberal government, just as the, Alberta government had the incoming NDP government. These are shifts, and it's not going to be easy for them to cut ties with the old lobbying interests and money interests, but it is another point that, they're in change right now. They want to reflect some sort of change. And I think that will all be helpful in getting some actual transition at last in some of this policy and retooling the Canadian economy, as you say, retooling the Canadian economy into something that's more productive than just these old backward-looking approaches.
Well, did I mention that Enbridge, who owns pipelines and builds pipelines, is buying a $200 million wind project in West Virginia? Perhaps even the oil transportation companies are seeing which way the wind is blowing, literally.
Yeah, interesting, eh? There was a massive one in Abu Dhabi. They're doing massive solar and wind operations. The desert there is being filled with these solar farms that are literally more efficient than any other kind of energy production you can get. We may have mentioned this before, the east coast of North America has enough wind if they could just put serious money into wind farms, which literally can float on the ocean, by the way. There's a lot of places now rolling out floating wind farms that are on the ocean, and so not on land. Everyone's worried about them hitting their house and that sort of thing, but they can put them offshore, and they would have enough wind there to harness to serve all of North Americans' electricity needs if they would just do it, So it's,
what about those wind turbine trees the French have developed? I mean, from a distance, it looks like an ordinary tree, but what look like leaves are little turbines.
Yes, I've seen that. It's pretty fascinating.
Well,
right?
A whole neighborhood of that.
Yeah. So I think the idea of wind technology is very much in transition as well. From the idea of these huge, big propellers, we're getting to a much more, almost like single production things that fit into the existing landscape and don't necessarily, pose the threat that people have perceived them to up until now. But
aesthetically, they're very pleasing. You'd put one in your front yard to complement your real tree.
Yeah.
And I could see them being designer colors and having reflectors on them. I mean, instead of just blending in, maybe make it stand out. I've always wondered, why do factories have to be designed to look ugly?
Yes. And, another major thing that's happening is about investment dollars and subsidies. So, subsidies being theoretically really taxpayer investments because they're through tax incentives or actual payments into different industries. So we know that the fossil fuel industry has been an enormous recipient for a very long time of massive tax subsidies from the governments of the world, and you're seeing a lot more criticism of that now and saying, hey, why is fossil fuels more worthy of tax incentives or subsidies than all these other amazing technologies which are coming along? Not only that, but you have, major banks like Citigroup just said that they're going to move away from coal and stop lending into the global coal mining industry in the way that they have been doing. Major investment funds in the world, for example, the Bill Gates' foundation, have said that they're going to stop investing in fossil fuel companies. Other pension funds are starting to say that. So, I think this is all part of this commitment to say, we've been benefiting this sector. It's cost us a ton, both in global impact, in health impact, in water shortage, in Middle East conflict. All of this is connected. And it's all these incremental changes on every single level, from government to individuals. behavioral shifts, money flow shifts, all of that is really, as I say, changing things in, I think, a way that has never even been remotely possible in the past.
Well, I heard that there was a huge appetite for change and revolt. Maybe it started with the Arab Spring in 2011 and has finally got here where people are just saying it's that old movie where, I was mad as hell and I'm not going to take it anymore.
Yeah, and I think, there's a lot of, Neil Howe has written that book, The Fourth Turning, and I think that through history we do have these periods where a bunch of factors come together to just topple existing structures, and that can be done in a violent way in some cases. Think of the French Revolution, or it can be done in a more collaborative way when everyone begins to see that there's more upside than downside, right? That there's more in this. As I say, this doesn't have to be an anti-business message. In fact, I would suggest that the renewable energy surge going on in the world today is the most exciting business opportunities since I can remember, since probably the automobile. And it's literally, touching from micro and macro, from small business, from service providers to, massive infrastructure like GE. There's just opportunity at every level, and there's really no downside, except if you're trying to maintain status quo in some of the areas where you say, we only want to sell oil. I saw quite a disturbing report, I think it was this morning on Bloomberg. They were talking about Chevron and how Chevron is doubling down on fossil fuels because they are convinced that the world's going to be addicted to oil for many more decades. And I thought that was quite a troubling sentiment because I think they're wrong, first of all, but I think that it defies good business sense to insist on a model that is being rejected by most of the customer base in the entire world at a time when, smarter solutions are coming along. So I think it would behoove them much better to think of themselves as an energy company and start figuring out alternative energies that fit that bill rather than to insist that they're going to continue selling the same old product. I think that will be a complete waste of their capital over time. But time will see, I guess.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Danielle, what kind of shape is the federal government's finances in? Of course, every new coming government at any level I've ever seen says the last guys left the books in a mess and we have a lot less money left around to fulfill all of our promises.
Right. Well, that is kind of true, but the reason that it's true is consistent. The reason that is true is that the governments in Canada for the past, many terms have not done much by way of diversifying our economy off of rocks and trees as a main product, a main export in a rough fashion rather than a secondary or manufactured goods sector. So the Liberals come in, they were expecting they were looking at the numbers based on an unrealistic expectation for the price of oil, just as the Conservatives were. The latest budget is looking at an average cost, I think they said, of $56 a barrel is expected in 2016. They were at much higher levels before that, right? Over the last few quarters, they kept sort of factoring in $80, $70. Now I think they're down to $56. But, with oil currently at 42, we're talking about West Texas, that's not Canadian crude, West Texas at around 42, it's quite possible it could be lower in 16 rather than higher. And in which case their deficit expectations are way off the mark still. So, at some point, it's a constantly moving target. Governments are much like financial forecasters, are excellent at telling you what's happening now and not so good at seeing the macro trends that are happening coming in. And I think in this case, they should really plan for a rainy day. They should really look at, what revenue base is likely to be coming in if oil doesn't rebound into the 50s, but in fact stays where it is or weakens in 2016. I guess one of the things that I think is probably in our cards here, when I look at the world right now, I don't like equities in general. I think they're insanely valued. in most sectors. I think corporate debt is insane today. I think we went through this issuing of corporate debt period because rates were low and investors were desperate for yield. And now we've got literally corporations with balance sheets that are twice as levered as they were going into the 2008 crisis. And if you remember, that was considered reckless risk in retrospect back then. Well, now corporations are twice as levered as they were then. So that should give you some indication. High yield debt has been selling off over the last year. And I think that reflects this realization that there's a lot of risk in corporate balance sheets, especially heading into a slow growth phase where revenues have been falling for some time. It's hard to service your debt, pay your dividends, and grow your business when your revenue keeps falling and you're carrying record amounts of debt. So it's getting harder and harder for people to refinance that. There's less appetite for it. The one thing that I think is probably the most bullish in all this is, I would say, certainly in Canada, I would say, is government debt. So provinces, municipalities, cities, some of them, a lot of new issues in the last little while of bonds to raise capital for the coffers. Now, I think that's partly a revelation that interest rates are low and it's a good time to lock in some of your financing, but it's partly a revelation about the deficits that are now and likely to continue for some time here because of the weak growth, the recessing economy, revenue loss, taxes are going to be lower. And I think what you're going to see is they're going to increase tax levels, whether it be property taxes. There was, a big rally at around Queen's Park in Toronto this week because the municipalities are bringing in a law that allows them to increase dramatically the property taxes in their areas. And of course, the realtors and everyone are up in arms that this is, outrageous friction costs on real estate. I think it's a fool's game to think that in a world where revenues are falling and cash flow is contracting or weak or insufficient to fund everyone's hopes, that you're not going to see an increase in taxes. So I think that you're probably going to see prices rise for some of this government debt just because there's not a lot of safe places to put money today. Also, because governments can literally increase taxes to meet their budgets much better than businesses can just insist on more customers, if you know what I mean. We are all sort of captive in a sense, certainly in terms of income tax, but also in the sense of property owners can just get increasing bills. And as much as people hate that, I think that's likely what's going to happen here to help meet some of these shortfalls in budgets all over Canada.
BC's unique, I guess, in Canada. They have a balanced budget with a small surplus. The city I live in Burnaby, has $1 billion surplus. It borrows from itself when it needs money. There are some people who know how to run, but is it a matter of luck sometimes, or you just have the right balance of home owner taxes, business taxes, other income?
Well, it can be luck, but it also can be smart planning. It can be, this notion of diversification to have varying streams of income coming in. This idea of self-funding yourself is brilliant, in my view. We've come through this time where private banks have become these go-betweens in every facet of human life, and they have enriched themselves to obscene levels, grotesque profitability taken out of our hides, basically. Whether it be, governments needing to borrow money to run budgets or build infrastructure, and in the past they would have done things like self-funding, have cash in their own coffers and loan it out to various projects, or the Bank of Canada used to make loans directly to municipalities and provinces for infrastructure builds, interest-free loans, that kind of thing used to be part of how we got things done in this country. And I would say in the last 30 years, we really moved away from that towards this idea of using private banks to make profits on everything we go to do. Well, in this new slow growth, lower revenue environment, we just can't afford all those middlemen and all those fees and the financing costs, even if rates are low. I think that, the irony is, how do you prepare for the downturn? In the discipline and care you take during the boom. Right, so the boom period when everyone is making more money than they'd thought and things are going well, that's when you really need to put away savings, keep them, carefully protected, spend less than you earn, and plan for how you diversify your economy or your income stream, control your spending, all that good stuff. And it's all that, the more work you do as an efficient and prudent manager in advance of the downturn is how you come through it, right? It dictates how you come through it. So sometimes it can be luck where you just happen to, have sell assets or have a bonus come in at some point before the cash flow crunch hits. But most of the time it's more about diligence and forethought than it is about luck.
Well, the theory behind low interest rates was that companies would borrow money at low interest and invest in new factories, new marketing plans, and so on. Instead, they bought back their shares. Was that a fatal flaw for these companies?
Yeah, I think it's going to be, in retrospect, a very poor management decision. I think that they got greedy about executive bonuses and compensation and how much that was tied to ever-increasing share prices. We've been in a falling revenue environment since the world turned down again in 2010. The world economy really only rebounded in terms of, out of the Great Recession of 08-09, really only rebounded in terms of manufacturing and legitimate demand into about 2010. And that was not back to the prior highs, by the way, of the credit bubble in 07-08. And so that's when policymakers panicked and started flooding the world with money no one wanted to borrow, just to flood it and think that that would somehow force the pedal to the metal again. But in fact, it just created a bunch of waste and malinvestment pooled in various spots. And one of the places that it pooled was in corporations because they could borrow money, because accounting-wise, it was cheaper to write off interest. They could do some accounting magic and borrow money, write off interest, buy back their shares. They were borrowing to pay dividends, to placate investors, which is never a good idea. A true investor should be someone that wants you to build the enterprise in the long run, not just borrow to give them back money.
That sounds sort of like a Ponzi scheme.
Well, it's just destructive in the end. It's a dumb plan. If any individual was doing that, it was borrowing just to pay an income to somebody, you would say, well, that's not a very good idea. You're not actually making the money to pay them that, so why would you borrow to pay them that? Surely that's a finite exercise when you're going to hit the wall and not be able to borrow more, and then what do you do, right? And that's exactly what's happened with businesses. And now, as they say, they've got twice as much debt, and they're still in a falling revenue environment. And the real recessionary impacts of this down cycle that's ahead of us haven't even been felt yet. So I think they're really poorly prepared for the coming downturn. And partly, I guess, it was complacency purchased by federal central banks of the world, assuring everyone that they got this. Well, they didn't have this, right? This is just nonsense. No one, quote, has the world economy. You have to drive that from actual consumption demand and from, growth. And until we can get a bunch of the weight of the leverage and the demographics and some really more smart stuff going on the energy and innovation side, it's not going to be enough to offset the downturn and losses that are happening from the GDP destruction on the old, antiquated business side, which is what we're seeing right now.
We're speaking with Danielle Park from Venable Park Investment Counsel Incorporated, and of course the editor of the popular blog Juggling Dynamite. Water. We were discussing this off air, perhaps the most valuable resource on the planet, but we have some corporate heads right now saying water is not a right.
Yeah, well, you know what? I don't know if we're able to say water is a right. Are we able to say clean air is a right? I'm not sure what right even means. I know that it's something that is critical, that we have to preserve for the entire planet, and we've been doing a bad job of that. I don't think, for example, it's a right. I don't think it should be a right of Coca-Cola Company to take whatever water they want out of the ground, add some stuff, and sell it at a profit. I think we have to get a lot more intelligent about the way that we see water. It's a critical utility. I remember even in the commodities fever time back in 2011, saying to people at commodity shows, depleting fresh water to extract other commodities is a fool's game. In the end, it's it's a finite source and we can't live without it. So we can live without, for example, a bar of gold, but we can't live without water, right? And yet we were wasting all the water to bring out these hard things that people of questionable value in the big picture. So I think we're, again, having to reassess and say, surely we need to manage this critical resource in a more intelligent way. So I don't know if right is the right word, the correct word for that, because right suggests people can just, I think about the ocean as another example. What are human rights vis-a-vis the ocean? Some people would say, well, it's our right to fish, it's our right to, have all we can eat shrimp at Red Lobster. I would suggest to you that none of that is a right, that there is no such thing as, insatiable, you can take whatever you want. It all has to be managed with a view to sustainability. And so I would see it as it's critical, therefore we have to treat it with great respect and intelligence in how we manage it. But I don't like this language around people demanding this and demanding that.
Well, I've always noticed people who go to, say, anti-pipeline protests come there. I said, well, what do you have on the soles of your shoes? Rubber. And I said, and where do you think it came from? Well, the crude oil that you're protesting. How did you get here? You came in a car or a bus. You know, there's always a balance, isn't there?
Well, there is, but that reminds me of the BC law that was it to Vancouver that recently passed the bylaw that said they're going to start putting warnings, like cigarette pack warnings style things on
so North Shore of Vancouver, North and West Vancouver.
Right. So they're going to put this on gas pumps, which, warning that there's climate change and that fossil fuels is impacting it. Now, I'm not against this idea, but I have to wonder, to what extent is that empowering of people when they really don't have another feasible choice right now? In other words, yes, buying a Tesla is a wonderful thing, but with the price point, it's not accessible to most people yet. So, you can put a cancerous lung on a cigarette pack and a person could choose not to smoke, but if there's no other alternative to burning fossil fuels or using, as you say, plastics and rubbers and things that all come from the fossil fuel industry, to what extent is it a choice that we're making? But I think at the margin, it's still a useful thing, because I think complacency is the enemy of change here. I think that the more people, and we've done this, let's face it, we've done it for decades. I mean, Thomas Edison was telling Henry Ford in the 30s that sustainable energy required us to look at renewables and not just think of coal and gas. And here we are, almost 100 years later, still using the same old technology. So I think that people have become have just sort of accepted, and it's been out of sight, out of mind sort of thing. And I think that all these warning labels are all fine, but hopefully it will enlighten people to push back more and demand more in terms of policy and procedures and change in their community and in their choices, right? So so all of that. I mean, I think we all individually have to take part in this and be involved in political process and exerting business as consumers, exerting pressure on business as consumers, demanding more alternatives. So it's all part of it, but it's not enough to just do one of it. Let's put it that way.
Well, here in BC, we're spending $9 billion for BC Hydro to build the Site C Dam on the Peace River, flooding Aboriginal religious grounds and historical areas, flooding very, very fertile farmland. And I thought, what if they went and gave homeowners $9 billion to put solar and wind on their homes? Would that accomplish the same thing without destroying anything that was valuable?
Yeah, well, it goes back to this whole idea of water as the most important thing, right? And someone, I got this concept of the river arteries of the planet a number of years ago when someone explained, that the human body, as an example, has a bunch of rivers and streams flowing all through it. And when you try and restrict one, you create imbalances, you create blockages, you create ill health in the body, right? When you try and block off certain arteries and say, no, we don't want, blood flow to go here, we want it to go there. And I think that that's what we've really done to the planet and to the continents. And our water system has been screwed up, really, by our, self-interested, I want the water here but not here. And I think that at the end of the day, we, again, have to go back to some sort of respect for the wisdom and the brilliance of the natural system that says water must flow from these rivers to this ocean to, and it's all connected and it all matters. So, yeah, I would say, everything we can do, as I say, it goes back to vertical farming, hydroponic farming, more intelligent ways to create agriculture and to waste less of it, because we're doing less shipping, as an example, and it's more locally grown. If we do all of these things, we don't need to perhaps to divert water from one area to another at the expense of others, let's put it that way. Or, as you say, if we have alternate ways to make energy that don't involve damming more river projects, and we do now, let's face it, we do have those other means, then why wouldn't we start doing that and stop doing the old systems that are creating all the water shortages?
Well, talking about sustainable, a couple of companies in Canada are using shipping containers, and a relative of mine in London is doing the same thing, where you put fish and hydroponic vegetables in this container, and you can park it anywhere, behind a supermarket, a restaurant, and that supplies fresh fish and vegetables to that particular thing.
Absolutely.
So you don't have to transport anything anywhere. It's right there and it's fresh.
Absolutely. I remember my father grew up in Belfast during the war, and I went to see where he lived a few years ago, and there was, row housing and very industrial in the middle of heart of Belfast. But when you walked into the back, it was all tiny, tiny little yards, no big green space. But people were growing food, right? Growing potatoes and various green produce right there in that little plot at the back stoop kind of thing of each of these houses. So I think there's a certain school of thought that thought if you became, and that was back in the 1930s. I think there's a school of thought that sort of thought, well, if you're well-to-do or you don't need to do such mundane things as grow your own food, grow your own vegetables. That's for, quote, farmers to do. You're a city person. But I think that's a very foolish idea, and it's really only been around, say, for the last 50 years as we've sort of migrated away from those ideas and compartmentalized ourselves into, no, I'm a paper pusher, therefore I don't try and grow any food.
Well, I notice every year the farmers markets are more popular than ever.
Right. So I think it's part of this awakening where people are saying, hey, you know what, it's smart to know how to grow a bit of food. It's incredibly better for my body to have fresh food at my doorstep than to have it shipped from Lord knows where.
And what's in it.
And what's in it, and it wastes less, and it's more efficient, and I mean, you could just go on and on. So, again, I think it's all of these things together, Jim, and it is truly the most exciting time ever that I remember hearing about, studying, or living in my 50 years, which is, I think, perhaps different than you would think if you just listened to the CNNs and BBCs of the world today, where they're telling you all about the terrorism.
Well, it would have sounded
stuff.
I know. If they would have done this 100 years ago, they'd be whining about the decline of the horse and carriage business, that these darfangled automobiles are taking over the planet, and can't we stop it?
It could be. And I mean, part of that complaint was to do with the pollution that the cars were causing. And that was actually correct,
yeah,
right? We
but
didn't
New York City, though, did a
that.
study back in 1880 saying if we continue growing the city this big and so many more horses are added, we'll have to shovel like 1 million tons of horse manure every day.
That's a good point.
What are we going to do with it?
And there was emissions from that were climate destroying as well. I mean,
sure.
Methane is one of the biggest problems, right? So, yeah, absolutely. I mean, we don't have to, live in the dark ages, but we could be extremely more advanced and I believe healthier at the same time.
Danielle, how can people find out more about Venable Park Investment Council Incorporated?
We have a website, venablepark.com, but also my daily blog, jugglingdynamite.com.
Thank you very much for chatting with us.
My pleasure, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Don Swenson, owner, operator, and president of KingdomEconomics.com. Welcome to This Week in Money, Don.
Very happy to be with you, Jim.
You were just at the Silver Summit in San Francisco. Were there a lot of people there?
There were approximately 300 people there for the two-day event. I would say the first day maybe around 200 and maybe a little less than that the second day. So that was about the number, 300.
Now, is that low or high? I haven't been to the San Francisco Summit.
Well, this is actually the first time they've had it in San Francisco. The last 4 or 5 that I attended have been in Spokane, Washington. And after last year, they decided to move the venue to San Francisco. So this is the first time in San Francisco.
Right. Now, of course, silver and gold have reached, I think, 2 or 5-year lows now. What kind of a mood would there be at a summit like that?
Well, there was a mixed mood. There were speakers there that were very upbeat about a bottom having been reached, and others who think we're very, very close to a bottom. And then there were a number of speakers who feel like the markets are being manipulated and prices suppressed. So you had a little different mood in the in the rooms where those speakers were presenting their case.
Was there any one presentation or company that stood out at the summit?
Well, like I say, I attended probably probably about 4 or 5 or so on the first day, and about the same on the second day. I would say that the speaker hall where they had the main speakers, Rick Rule had a pretty full house. Mike Maloney, when he presented, had a full house. Grant Williams, he presented in one of the resource rooms, and he had a full house. So yeah, most of the top speakers had a packed room.
Say somebody like Rick Rule, what was his point of view on gold and silver right now?
Rick felt like we're close to a bottom. He didn't think we might be there quite yet. He thought we could experience another year and a half of prices down in the range where we are now, from 10 to 15. But he feels that now is the time to really get into the market, because he feels like if we're not at the bottom, we're so close to it that anyone who buys now is probably going to be able to take part in a major bull within the next 2 years.
Was he suggesting perhaps take a look at some profitable mining stock?
Yeah, he was in favor of some junior mining stocks, some producer mining companies, buying the physical metal if that's your take. He had all the different options available for people to think about, and he said that he is definitely in the market buying himself. So he convinced most of us that he wants to buy now.
And I would say too, with prices suppressed, certainly there must be a lot of bargains out there.
Well, exactly. He was talking about prices coming down from 70 to 90%, and he listed a number of companies that had declined 90% in the last 2 to 4 years, and they were still solid companies as far as assets in the ground, and he made the point that buying companies that basically have assets in the ground and haven't actually sold at these low prices might be a better deal than buying companies that have been selling and losing money at these lower prices. So he convinced a lot of people that now is the time to buy even exploration companies that have proven reserves that are in the ground and haven't been developed yet.
Of course, you're not getting much of a price for it. Again, I guess patience is probably the key to this market, though. Everything seems to be elongated. We thought the equities market would have, adjusted or had a correction 2 years ago, and somehow it's still managing to survive. Is that the case with gold and silver miners as well? Things have come down, but if they're still operating, and some of them are still making money even with lower prices, that patience is probably the key to investment. Yeah,
like I say, I attended a number of the presentations by the various mining companies. For instance, Endeavor Silver, which is a very solid company, and I own it myself. their presentation pointed out that they're at break even right now with $14 silver. They're losing on a couple of their developments, but they're overall breaking even. So they feel like they aren't ready to close up shop. They're going to hang in there and try to weather the fact that the prices are this low.
Are people again being warned, if you're going to invest in a mine, or take a look at the political situation surrounding that mine? Because I know in some places in South America where they've had long-term droughts, mining operations really aren't that popular with the locals because they're taking the locals' water for their production.
Right. Yeah, Rob McEwen gave a presentation about Argentina and his own developments, and he was very positive with the political changes that have taken place recently in Argentina, and he feels that that's going to benefit the resources that he's working on. So he was very positive about his mines in Argentina.
When things do start to turn around, will gold or silver lead the way?
The general consensus was that gold will probably be the initial metal to explode upward, and silver then will be a multiple of gold because it's suppressed even more than gold. So most of the speakers felt like if you want to take some risks, get into silver. And that's what I've been doing.
Did anybody talk about precious coins at the show?
Precious coins? What do you mean?
Gold and silver coins. And the reason I ask is I had friends asking me if this would be a good time to be buying gold and silver coins.
A number of speakers pointed out that bars are being converted into coins because the coins are what are in real demand right now, and a lot of the sellers of coins have a shortage. So the demand for coins seems to be exceptionally strong right now, much exceeding the available supply.
And of course, coins for the average person probably a lot more affordable than buying bullion.
Exactly. Yeah, I've been buying the 1 ounce silver maple leafs, the American Eagles, and all these various 1 ounce coins, and to me that is a smart investment right now because you have the ability to exchange them, very easily at a coin shop, and at the same time, it's a good store of value if you want to just hold them.
And they're nice to show off to your friends if nothing's happening in the market.
Exactly. I just did that today. I showed off some of my coins to a lady friend that is finally learning a little bit about gold and silver and wants to get in the market, and I showed her some of my coins, and she said, yeah, that's what I want. So I do think marketing the coins is probably easier than trying to market the bars or the bullion.
But again, you should educate yourself before you get into it, right?
Always, yeah. I think very few people are informed on gold and silver, and a lot of them get into the paper market and the digital market, not realizing that what they're buying may be just an imaginary virtual contract with no gold backing it up. So I advise people, as most of the speakers did at the conference, to buy the physical coins and take possession, have them delivered to your own home, and take possession of them and store them yourself.
And of course, that's something that you can hold. And if there is some kind of a financial crisis, or as Ted Koppel's book says, if the energy grid is hacked somehow and shut down for days, weeks, months, you will lose your access to your paper money because the ATM won't work. But if you have coins, you can still use them.
Exactly. I mean, most of our money now is in cyberspace. It's in the it's computer and electronic digits. So if the power grid were to go down, or if they were to shut down the power at a particular bank or particular venue where you have your gold stored, you could be waiting. So by having the actual coins and having them delivered to your home and having them stored privately, I think it makes a lot of sense.
Pretty hard to hack your coin collection. By the way,
exactly.
Unless somebody steals it, and that's up to you to keep it secure. At the conference on gold and silver, did anybody talk about, well, really the way of the future is Bitcoin or some kind of a cyber currency?
Yeah, There's a few speakers that are high on Bitcoin. I have looked into it myself, and I don't listen to those speakers anymore because Bitcoin is really just a virtual image in the computer screen, and it is not backed up by anything. In fact, it's tied to the dollar as far as its value. So if the dollar were to be reset and not available, Bitcoin, how would you value it? You can't value it without the dollar, and it's just a virtual image in the computer screen. So to me, it's nothing like having a physical coin in your own possession. That's 1 ounce of physical silver, and that you can barter with if necessary.
Is there any one central theme that KingdomEconomics.com has for its clients?
Well, basically, my mission for the last 40 years has been trying to educate people on the history of money and the evolution of money, to help them to understand that what we have today is really not money. What we have today is imaginary money. It's in the computer screen. It's digital. It's created out of nothing by the central banks, and it's very subject to a collapse at some point down the road. So it's really not money. It's really not even currency. It's just our imagination, and it's in cyberspace. So it's nothing to rely on for a store of value. If you want a store of value, you want something that's physical that you can have in your possession that you can barter with. And you can't barter with the digits in the computer screen. Those are strictly imaginary.
Right. So if you're thinking about exchanging real values, then that's what you should perhaps base your wealth or savings on.
Yeah, you want something physical. I mean, the history of money is that money is a proxy for value. Value is a subjective idea that we have in our minds, and when we exchange something, if I exchange my eggs for your bread or whatever, we're exchanging relative values. And to put a number on that, we use currency. We use currency, and it used to be when I was young that we used physical currency. You know, silver dollars and silver dimes, silver nickels, and we exchanged for whatever we wanted. Now they are eliminating all these metal coins. They're eliminating paper, and we're going to a cashless, basically, society that's in cyberspace. They're just digits in the computer, and to me, that's not a sound system for stability, and it's actually not a store of value at all. Because if the power goes out, your whole store of value disappears. You know, so what kind of store of value is that?
Don, how can people find out more about KingdomEconomics.com?
Well, they can go to my website, www.kingdomecon.wordpress.com, and review that information. I've got the history of money. I've got missives that I've written for the last 6 years, hundreds of them. They can pick out whatever issue or subject that they're interested in and get a review of my thinking. Like I say, I've been a teacher, so I've been teaching PhDs in economics about money and about the evolution of money. So I have a pretty good understanding of what's evolved and what's happened over the years.
And Don, I bet you there are no stupid questions when it comes to money. It just means you don't understand, doesn't it?
Exactly. There are no stupid questions. And I find that everyone is at a different level of understanding based on their experience. And I respect all the different points of view, and I learn from everyone. So I feel like whoever I talk to that has some knowledge, I can learn from.
Don, thanks a lot for chatting with us.
Okay.
Don Swenson, owner and operator and president of KingdomEconomics.com, has been my guest. And that wraps up our show for this week. I'd like to thank our guests, Bob Hoye, Danielle Park, and Don Swenson. And thank you for listening. Any questions or comments about the show can be sent to info@howestreet.com. I'm Jim Goddard. We're back again next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.